In today's video, I'm going to show you how to navigate the crypto markets in the way where I wish was taught to me when I started my journey 9 years ago. Over that journey, I've made hundreds of thousands of dollars. I've made over $1 million, but I've also lost a fortune. And through all of it, I realized something very important. The people who consistently make money in the markets aren't necessarily smarter. They just understand a very simple thing, which is when to position in the market and when to go aggressive versus simply sitting out and waiting for the good times to return. And that's exactly what I'm going to show you how to do today. By the end of this video, you're going to learn three things: when to get involved in the market and when to sit out, what to buy and what to pay attention to, because there's no sense in buying coins that aren't going to move that cycle, and finally, how to manage your positions and come out with a profit by the end of it, because what's the point in participating in the bull market if you simply give it back to the market? And the first thing we're going to dive into with what I wish I knew when I started is the when to invest, because this is most likely the biggest part. A lot of people sometimes say they got lucky in crypto, and this is what they mean, because they arrived at the right place at the right time. And this was true for me on my first run. I've been in crypto for 9 years, so that's 3 cycles. And on my first cycle, this is exactly what happened. I got really lucky. However, on my second cycle, it was a bit more planned and calculated. So let's talk about what goes into understanding when to invest. If you've been in crypto, you understand that there's been this thing called the 4-year cycle, but it's very, very misunderstood. A lot of people think the 4-year cycle has a lot to do with the Bitcoin halving, when in fact it has nothing to do with it. Bitcoin runs at its own cycle. We don't know why, it just does. So let's dig into what the 4-year cycle is. Like I said, this has nothing to do with the Bitcoin halving. Okay, it has everything to do with Bitcoin's own cycle, and there's variations of it. We'll dive into it here in a little bit. It has nothing to do with the news. It revolves around sentiment. Okay, so you see a lot of people relating to certain price action events happening because of news, when in fact it is cycle controlled first, and then you attach the news to the price action. So when Bitcoin is going up and it's in the bull phase of the cycle, negative news doesn't have the impact it would if it was in a bearish phase of the cycle. So the sentiment is controlled by the 4-year cycle. That's the overarching rule for Bitcoin's movements. And if you can avoid being manipulated, you can actually simply notice the manipulation and be on the right side of it, because this market's going to move the way it's going to move regardless. If you start attaching your own beliefs that are not aligned with where the market is moving, you will endure a lot of pain. So you have to kind of detach from what you want to happen and simply face reality of what is happening. And if you position yourself in a way where you're simply going with the current instead of swimming against it, you'll find yourself in a much better position to take advantage of the opportunities ahead of you. And the 4-year cycle has a variation. So in the past couple of years, we've had the variation of 3 years up and 1 year down. And that's been going on for the past couple of cycles. However, there are variations. We could have 2 years up, 2 years down, or we could have 1 year up and 3 years down. It just depends, because if it's a 1 year up, 3 years down, then the move is going to be much more aggressive and more time compressed, whereas 3 years has more of a window to take its time to reaching the peak and then a year to go down. So 4-year cycle doesn't mean it's going to be stuck to this 3 years up, 1 year down. Otherwise, the market would be too predictable and everyone would be a winner. Instead, trading is a zero-sum game, so that means there has to be losers. And if the market's too predictable, then obviously we're going to have too many winners. So it needs to switch things up to keep things fresh and unpredictable. Now, when we get into the bullish phase of the 4-year cycle, it gets very easy. So when it's easy, it's very easy. Crypto isn't hard all the time, but the hard times make you feel like they'll last forever, same as the good times. When you're here during the hard times and they're brutal, you think this is how it's always going to be, but that's not the case. When we look at the S&P, for instance, yes, it can go through bear market periods, but for the most part, the chart is up and to the right, and that's simply how the market goes. Same thing with crypto. You'll have moments of bearishness, but then you'll come back with the bullish phases, and when they come very, very strong. So crypto allows you to compress how long it takes to make a fortune. Because the market is tiny, we start at very low valuations that give you a massive room to turn a little bit of money into a lot. We're talking from $1 million to $100 million, or from $1 million to $1 billion. These opportunities do exist, and they have the highest chance of actually coming to life during the bull market. So in the bull market, the ceilings will become massive. You'll hit evaluations you weren't thought were possible. In 2024, this happened with memes. In 2021, this happened with a lot of speculative tech coins. And in 2017, it happened with ICOs. So this happens every time with variations for each cycle. And here's the tricky part. It gets so easy, you will think it'll be easy all the time. And this is not true. This is actually a trap. You'll be in the market making so much money you didn't think was possible, and you'll think that this market is here to last forever, but that's the trap. And you need to stay diligent in securing profits and preparing yourself for the next cycle, because eventually there will be a bear phase you want to be prepared for and loaded up on cash so you can take advantage of the next cycle. And there's always a next cycle. So don't get fooled into thinking you're a genius. You're not. This is simply you being at the right place at the right time and having the right knowledge to take advantage of the opportunity. So when we are risk on, there's going to be so many opportunities, you won't be able to catch them all. You'll see everything going off left and right, and sometimes your coin might be going sideways, but that's okay. You'll be tempted to chase, but those are building bad habits, and then eventually your coin will end up going. What happened to me in 2021 was that I picked coins that happened to be the last to move, but I stayed on course and I held the coins that I thought were winners, and I ended up holding those coins for a very long time. I did get some movement in between the waiting, but it was nothing like the other coins were doing. For example, I was looking at Theta. Theta had moved from $60 million to about $20 billion in market cap. I think it was 20 billion. It could have been 15. Either way, massive moves happened. That was at the start of the market. And then we had many, many movers in between. However, the coins I was holding took a lot longer for them to move towards the upside. And it had me doubting, am I going to take part of this bull market or am I going to be left behind because my coins are moving? Well, towards the end of the 2021 cycle, my coins actually ended up moving from a $30 million market cap to $1 billion. That was on one coin. And then another coin I had held at $7 million market cap ended up going to about $550 million in market cap. So you can see these absolute massive moves towards the upside that just took time and required patience. So at this point, it felt like I was cheating. It felt like I had found some kind of hack to life because I was working a job at the time, but I made more money in those 6 months than I would have made 10 years at my job. It was absolutely insane, and that's why I keep sticking around in crypto and how I ended up quitting my job back in 2021. Now, another important part of this is to keep track of where we are in the 4-year cycle, because if you keep betting the same amount and increasing your bet size throughout the cycle, you will be incurring more risk, because the closer we get towards the end of the cycle, the higher the risk that the cycle might be over. It's not going to end exactly on a specific date. Instead, the odds of the cycle being over simply increases. So the closer we are to the end, the wiser it is to scale out your money. You don't want to be increasing your bet sizes towards the end of the cycle. Instead, you want to start cashing out to prepare for the next one. So this is how I would navigate the when aspect of how to navigate the market timing wise. Right now, today, which is why you're probably here, we are towards the end of the bear cycle. So we probably have another couple of months, but the majority of it has been completed. I would say we have another 5 to 6 months of bear left in this cycle. And then once that time has passed, we'll be getting the next phase of the cycle, which could last between 1 to 3 years, which is why if you're watching this video, you want to prepare for better times to come and have that cash on the side to make sure you're ready to take advantage of the opportunities the market will be presenting you. So that's the when to invest section of. Let's do a quick summary before we move on to the next section. If you're wondering why you've been buying good projects and still not making money, there's a good chance you're playing the game at the wrong time. Crypto isn't hard all the time. It only becomes hard when you're trying to force profits during the wrong part of the cycle. And that's why I think understanding when to play is probably the most important skill you can have. Everyone talks about the 4-year cycle. The problem is most people don't actually understand it. Instead, they've attached it to the Bitcoin halving. So every cycle, we hear the same arguments. The 4-year cycle is dead. Nope, it's still alive. The mistake is thinking the halving creates the cycle, but it definitely doesn't. I think people are confusing correlation with causation because humans hate uncertainty. So whenever a price moves, we immediately look for a story to explain why, because we need a reason. If Bitcoin pumps, it was because institutions bought. If Bitcoin dumps, it was because of the tariffs, it was because of the interest rates, regulation, or any other reason you can think of during the time it dumped. But narratives don't create price, and more often than not, narratives follow price. And it's made evident with this example right here, where you can see bad news hitting differently in a bull market. You have the US crypto bank collapse, the SEC sues Coinbase, Binance founder headed to jail. You can see that the news doesn't have as much as an impact during the bull market because we are in a bullish phase, so the negative news doesn't have that much of an impact. It might cause a consolidation, it might cause a dip, but for the most part, the dips are being absorbed because we are in a bullish phase in the market. So like I said, narratives follow price, not the other way around. Here's a perfect example. Right now, you'll see a lot of people blaming Michael Saylor every time Bitcoin drops. The story is that if Saylor sells, Bitcoin is finished. But Michael Saylor, despite owning an enormous amount of Bitcoin, doesn't own enough to control the entire market. Not even close. Think about it. If Bitcoin were in a strong accumulation phase, those sales would simply be absorbed. Price might wobble for a bit, similar to how it did when Germany was selling, but then it would continue higher because demand is greater than supply. Instead, because Bitcoin is already in a weak phase, every headline becomes about sailors selling his Bitcoin and the price dropping. The narrative changes from Bitcoin is healthy to sailor is going to crash the entire market. Then people assume the headline caused the move, when in reality, the market was already vulnerable. The headline simply gave everyone a reason they could point to and say, this is why it happened. This happens over and over again. When prices are falling, the news is overwhelmingly negative. When prices are rising, the headline suddenly becomes incredibly bullish. And that's why you hear people say the markets are manipulated. Personally, I think it's less about one person controlling price and more about understanding how sentiment works. Large investors know fear and excitement create opportunity. When everyone is panicking over bearish headlines, someone is quietly buying, and months later, you read articles about institutions accumulating Bitcoin all along. When you zoom out over Bitcoin's history, you notice something interesting. For more than a decade, Bitcoin has spent roughly 3 years climbing and 1 year falling. Now, that doesn't mean it'll continue forever because markets do evolve. More people understand the cycle today than they did 10 years ago. So eventually it could break. But until it does, I'd rather respect what the market has done consistently than bet everything on this time is different. And here's the reason why that matters. There are periods where making money in crypto feels ridiculously easy and periods where great investors struggle. During the bullish phase of the cycle, liquidity floods into the market. Institutions are buying, hedge funds are buying, VCs are deploying capital, and Bitcoin begins to move higher. And Bitcoin becomes that confidence signal for the rest of crypto. I think of it like turning on a tap. Once serious money has started flowing into Bitcoin, that capital doesn't stay in Bitcoin forever because it signals to the rest of the participants that we are in a risk-on environment, and it begins flowing downstream, first into the large caps, then the mid caps, and the small caps. And that's why understanding where Bitcoin is in its cycle is so important. If you're investing heavily during the bearish phase, you're fighting an invisible ceiling. Can coins still go up? Of course they can. There are always exceptions, but the odds are working against you because liquidity isn't flowing through the market the way it does during the bull phase. Sometimes the smartest investment decision isn't finding a better coin, it's simply waiting for a better environment, because in crypto, patience isn't boring, it's actually profitable. All right, now let's move on to the what to invest in, because what to invest in is also going to be an important part of this video. So it's impossible to predict what will run, but we can have an idea based on the past. And I've been here through almost every cycle, so I have an idea of how these things go. Right now, what's hot in the world is going to be a couple of things, and what's hot in crypto is also going to consist of a couple of narratives. And AI obviously is going to be one, because we have the whole AI issue with closed source AI and open source AI. So that's definitely going to be a narrative we're going to tap into in the crypto world. It's set up for that. Then we have real world assets, which is a huge sector within crypto because the tokenization of the world is already happening as we speak. We see BlackRock talking about it. There's chains specifically launched for this purpose. So that's also happening. We also have stablecoin adoption. Visa and MasterCard are adopting stablecoins. It just makes sense as we're progressing towards a more digital world. And obviously memes are never going to go away, but there's kind of a caveat because we had the meme cycle in 2024. And I do think memes are going to perform continuously, but it's not going to be a focus on newer ones. I think what's going to happen is we're going to go towards the more established memes because they simply can't be diluted. They already exist, they have a holder base, whereas you can simply create new memes, and that's going to be a game on its own where people are playing the pump and dump meme game, which is harder to do. So we should also prepare for new narratives that we haven't thought of yet as well. So keep an open mind when approaching a new bull cycle. So as I said, there will also be emerging narratives that surprise us, so we have to keep an open mind. Because in 2024, for instance, lots of people couldn't get on board with memes and they missed out on a lot of gains. I was one of those people back in 2021 and I missed the entire Doge run because memes simply didn't make sense to me. And after I saw the appetite for memes in 2021, I kind of kept an open mind and said, you know what, memes are a thing, I can see it. And in 2024, I was perfectly positioned mentally to take advantage of all the memes that ran in 2024. And that's when I made the switch. Was in February 2024, I got on board the meme train. It was probably the easiest money I had made because memes move so fast and so violently that if you're able to get in tune with the game, you'll be making a lot of money there, but you can also lose a lot because they're extremely volatile and unpredictable. Now, one thing to note is that the crypto game has evolved each cycle. Rarely did it stay the same. Like I said, 2021 was a speculative cycle with insane valuations for many coins because of the COVID stimulus plus lockdown. 2017 was an ICO meta. And then 2024 was a meme slash AI meta. Towards the end, we had the AI come out, but not as much as I think we're going to see in the next cycle. Now, another important point here is that your network is your net worth, because you can't be everywhere at once. So when you have a group to trade with, you'll have one person focused on AI, you'll have one person focused on memes. And if you trust them and the results they've gotten in the past, then most likely you're going to be early to opportunities, more so than you would be if you were alone, because you've got more heads working in the game. So you want to build your Twitter list. You want to have a good network on your Twitter page. This doesn't mean you have to be in private groups, although private groups do exist and they do help. You can simply be on Twitter and build a following of people who are constantly early to things. Things take longer to move than you think. So having just trusted influencers or profiles that have a good track record of calling things early is helpful to have. Now, the next point here is a bit of a double-sided coin. New coins tend to perform better than old ones. And this has just been true from my observation. We've had each cycle new coins come out and they've performed much better than older Dino coins have. For instance, in 2017, we had Neo, Dash, XLM, all these coins. And in 2021, these coins simply didn't perform as well as the newer coins that came out, like Constellation or DAG or Atom or Cardano or BNB, all these different coins that came out during the cycle. So the same thing can be said with the meme cycle and the AI cycle. All these new coins that came out during the actual new cycle perform better than the old ones. So I expect this trend to continue as people go towards the new shiny object that doesn't have a bad chart and bag holders waiting to sell as price reaches their break-even price or their tiny profit price. So that makes sense why new coins would outperform old ones. But I expect this trend to change at some point, because older coins will eventually have that reputation of building through the bear, and it takes time to build things. So eventually I expect the new shiny object syndrome to kind of disappear, and it'll be more normal for coins that exist for many years to perform better than new ones, as new ones have a track record to prove. So keep that in mind. At this point, at where we are in the crypto game, there are a lot of chains and coins. So you have to simply follow the liquidity, because you don't know which coins and which ecosystem is going to run. Last cycle, Solana was the winner. We don't know if Solana is going to continue to be the winner or it's going to be fragmented once again. We have Base, we have Robinhood, we have Ethereum, we have Solana. Those are the main contenders right now, and we don't know where the money is going to flow. I personally think it's going to be a mixture of all four. We're going to have Robinhood, Ethereum, Base, and Solana. And I think they're going to rotate. I don't think everything is going to run at once. I think each ecosystem is going to have its time to shine. So you have to be adaptable and you have to follow the trends and take advantage of where the liquidity is flowing to capture the most gains. And one important thing I want to note here is to make life-changing gains, you only really need a few wins. And you can turn 1,000 into 5,000 with a nice 5x. You can turn 10,000 into 50,000 with a nice 5x. So all you really need is two 5x wins and you're at 50 grand. Now, the game changes when you have $50,000 in capital, because it's not wise to go all in. You have to spread your bets and have them individually reprice. Now, it's easy to say that you can just take 1,000 and 5x it, right? It's easy to say you can take 10 grand and 5x it. It's like saying, why not 5x 20 grand? Why not 5x 50 grand? And I'm going to give you just examples of how common this is, even in a bear market, to show you how realistic this is. Okay, so here are a few examples of coins that show you how much coins can move in such a short amount of time and how much opportunities there are in a bear alone. I talked about Triple T back when it was at 4 million and 3 million down here, and just buying into it at 3 million and having it go up to 12 was a 300% move. And then rebuying it down here again at 4 going to 28 is another 400% move. So you can see you had two opportunities to multiply your money at different points throughout the year. This is just one example. I also talked about Opal when it was at $1 million, and you can see this dip here is when I began talking about it, and it went up to about 6 million, close to it, 450% gain in a very short amount of time, 11 days. So another opportunity right there for another 5x in the depths of a bear. And in Percolator here, I was talking about it when it was at 400, or I should say 500 and 600K market cap, down when it was down here for many, many months. From February, it took about 100 days before it moved towards the upside. And when it finally did, from about 683K, you can see that's a 780% move. Now, what this requires is patience and confidence in the bets you make to make sure you're able to take advantage of the move towards the upside. And then, of course, you have to be able to sell. So there's many moving parts here, and it's harder than it looks, but it is possible and very doable when you have the experience and the confidence to be able to navigate the different variations of how coins move in the bear market. It's much easier in a bull market but you have to deal with the same emotions in the bull market, whether it's coins taking off and you're staying still, whether it's taking longer than you think, and then obviously taking profit, because this was a very fast move towards the upside. So you might not be able to realize the full amount, but somewhere down here about 4 million is still a good multiplication there. So you can go down to 683K again, and then that's still a 5.5x even down here. Let's say you didn't go all the way to the top. So the opportunity to make money and multiply your money is there, but it requires patience, conviction, and obviously confidence in your ability as a trader to identify opportunity, because without it, there will be opportunities staring you right at the face, but you won't be able to recognize them because you don't know what good potential looks like. Now, I talk about this on multiple videos of mine, so if you guys want to check one of my videos, I would simply point you to the video called The Pattern I've Seen Win 100 Times, or something like that. I'll put it on the screen here so you guys can take a look at that video, because it describes the patterns I trade with, and I use patterns religiously to make sure I capture high confidence opportunities so that I can sit through them, wait, and then profit off of them after enough time has elapsed. So this is a perfect segue to the 5 signal stack I use to identify opportunity. And it is narrative attention, wallet tracking, the chart, and the time. And I use all of these. They have different priorities at different times, but I will say the chart has most sway over me because it tells me what is a good opportunity and what isn't. And I actually have a PDF description, will be down in the link below if you want to download it. Just submit your email, completely free. And it's the 5 signal stack. It's about 20 pages of PDF with examples and detailed observations on what this all means. So narrative, attention, wallet tracking, chart structure, and time all have different meanings, and I'll show you how I interpret them and make sense of them to make sure I'm making the most of the opportunities that are in front of me while they're undervalued. And that's a big point right there, is while they're undervalued, because what I find myself doing most of the time is I'm always early to coins before the crowd moves in, and then once price is up, everyone starts talking about them while I manage to find them a lot cheaper. So that's the game I like to play, find undervalued opportunities. I'm against top blasting. I don't think top blasting is a winning strategy. The only time you win at top blasting is in a bull market, and sometimes in a bear. And finally, let's talk about how to manage navigating the market. So bull markets are forgiving. They forgive bad entries, and you can top blast and also be rewarded. But there's something to be said about building bad habits and getting rewarded, because if you try to practice bad habits long term, they will simply leave you at a loss, because bad habits are called bad habits for a reason, right? But they can be rewarded in the bull market for a short period of time, and you will feel like a genius, because during a bull market, almost everything goes up. Now, another point on how to manage your trade during a bull market is the hardest part will be selling, because you'll see your coin go towards the upside and everyone will start talking about how great it is. But that's exactly the point in where you want to sell your bag into liquidity, into higher prices. You need to avoid getting married to your bags, and you should continue to take profit as you continue making all-time highs. That's simply a lesson I learned through my bull cycle time in the market. So if you find yourself in disbelief about some event that happened, it's probably the top. For example, if you see Trump launching a meme coin and you think, wow, I never thought this would happen, I can't believe it, it's unbelievable. Well, that's usually a marking point, because what's going to beat the president of the United States launching their own meme coin? Now, in hindsight, it becomes obvious, but while you're in it in the heat of the moment, because you've got your meme coin bags and all this different type of hype, you're going to think, wow, we're about to go to the moon, when in fact, it's pretty much the point in which the Titanic is sinking very, very slowly. So you want to make sure to identify these opportunities, because they have happened multiple times throughout the bear market. Whether it's Tesla buying Bitcoin or the ETFs launching, there's certain milestones in a bull market where you think, wow, the industry is really maturing and I can't believe this is finally happening. That's the point in which you need to think, wow, maybe we're at the point in the cycle where I need to de-risk. So you also need to keep track of the 4-year cycle. As you near the end, it's smart to reduce risk. You also need to make sure your portfolio rebalancing as your coins are getting higher and higher in market cap, because your portfolio is going to be disproportionately all in one coin while your other coins are lagging. And sometimes it'll be wise to take some profit from that coin and either cash out or redistribute the profits into new coins, depending on where you are in the cycle, because there's always an opportunity cost somewhere. There's an opportunity cost on holding, there's an opportunity cost on rotating, and there's an opportunity cost on cashing out. Because if you're holding one coin and it's just consolidating and moving sideways, a bunch of other coins are going to be going up and you're going to feel that FOMO. So having some cash on the side to put into different projects is going to help you out there. And then there's an opportunity cost on rotating. So if you decide to rotate while your bag has momentum and you took profits already, your coin might actually continue going up because it's got so much hyper momentum that you miss out on the potential gains because you decided to reduce risk, which I'm not saying is a bad thing. I'm saying this is the realities of taking profit, is you will have moments of regret where you're like, I should have held on. For example, at the very start of the 2023 bull run, I had a huge bag of Unibot. I think I managed to buy around 40 grand at a $3 million market cap or something like that. And then it went on to go to 40 million and then 80 million and then 200 million. And somewhere along the way, I decided, you know what, I've had enough. I'm going to cash out all of it. And I took a 250 grand win. Whereas if I had continued to hold to the max potential, I would have made $1 million. But at the time, I saw other opportunities and it ended up being about okay to switch bags, but you're never going to get it right. So when you make a decision, just rest easy knowing that you could have not seen the future. Nobody can. So here's one important skill that I would highlight for traders and investors is that waiting and patience in itself is a position. Most of my money comes when I'm being patient in a trade and trust my skills and my conviction. So for example, Percolator, this took 100 days to come to fruition in a bear market. That's 100 days of chop while things move around. The good thing about Percolator is it simply bounced around in this range, which made it easy. It wasn't very volatile unless you invested in the top here and then it went all the way back down. But the market does give you opportunities to make money if you're simply patient. Opal, same thing here. You had to be patient down here and have conviction to make sure you got all this. No, I didn't enter down here. No, I entered a lot higher. Around 800 to $1 million market cap, that's where I entered. And the same thing with Triple T. I bought at 3 million and I cashed out at about 9, and then I rebought at 7 and I cashed out at about 15. So I'm getting these micro wins, and because Triple T is so volatile, it's a bit harder to manage, as well as the higher market cap. I don't have as much confidence in higher market cap ceilings in a bear market. So trading these higher cap coins, I simply go for the smaller wins, whereas trading these smaller cap coins, I know that the potential for these coins is around $3 to $5 million based on the data I have. So 3 to 5 million is a pretty easy shot for small cap coins to do. You see it happen all the time. In fact, you can also see coins go up to 20 million, but 20 million tends to be that hard cap. Of course, we do have outliers, but for the most part, $20 million seems to be the ceiling for a lot of coins. Now, like I said, waiting in itself is a skill. And during my second cycle, it took me 6 months of belief to hit my first $1 million trade. Now, that might not seem like a lot of time, but when you're constantly checking the charts day in, day out, it feels like a lifetime. And I know how that sounds, but this is simply how it goes when you've got money on the line and you're trading volatile assets. It has a lot of emotional sway on you, especially when you're first starting out. So it did take me 6 months to do it. And looking back, of course, I would say this was a pretty quick amount of time to make $1 million. My last point here is that every cycle creates a new religion. In 2017, ICOs are going to change the world. In 2021, we had DeFi and NFTs are going to change the world. In 2024, it was memes are going to change the world. And in 2025, it was AI is going to change the world. And this one was actually true. So it's about a 20% hit rate. So every 4 years, you can count at least one narrative changing the world. So these are the important points that I could think of when it came to how to manage navigating the market. Of course, there's more points, but if I packed in all my lessons into one video, I could probably make a 6-hour course. So this is just what I wanted to share that I had on my mind recently. And it should help you get started on how to navigate the markets when the new bull cycle comes out. There will be so many opportunities, and because I expect to come up in the next 6 months, I've opened up a Telegram group if you guys want to join. Link is in the description below. You just have to put your email, you'll get an invite. Make sure to reply to that email so that it doesn't get lost in a spam folder somewhere. And then you can join the group, and I'll be sharing opportunities throughout the days. There won't be many, but there will be quality opportunities that I'll be sharing. And if you guys want to get involved with the community and find quality trades, it'll be the perfect place for you. So with that said, if that's all too much to do on your own, I also offer coaching for one-on-one. You can make sure to check out links in the description below. I'll be running 50% off for the first 10 people to sign up. So if that sounds like something you'd be interested in, make sure to visit my website and book a call to see how I can help you. As for now, that's it for the video, and I'll see you guys on the next one.